Wow, this is good. I can't believe we are already on the 5th episode of Forex Success Blueprint. What are you waiting for before you kick off your journey into becoming a profitable Forex trader? All you need to get started are already in the Forex Success Blueprint. We started from episode 1 and here we are on the 5th episode. The whole video is already uploaded in this channel. You can go through them and watch. Episode 5 will be basically centered on candlestick patterns. Candlestick patterns are the only language that the Forex market speaks. If you're a price action trader, just like learning a new language, you must be able to learn and understand the language that price speaks. How do price speak to us, right? Price speaks to us by creating candlestick patterns that have predictive value. These candlestick patterns give us earlier information and clue about the next movement of the market. It's actually the edge you have in the market as price action traders that puts us many steps ahead of indicator-based traders. The answer to the question of how do forex traders know when to buy and sell are all embedded in the knowledge of candlestick patterns, and that is why I think this episode is very important for any price action trader. I would appreciate if you smash that subscribe button for me. That's if you've not subscribed to the channel. Then hit the bell notification icon and give this video a thumbs up. Why? Because I know you are going to get value from the information I shared in this video. So let's get started. So we are all set up. I hope you can hear me clearly, right? So we started with something very important. We started discussing candlestick patterns, which I told you from the beginning that candlestick patterns are integral component of your success in this forex trading business. You cannot do without candlestick patterns. You have to understand candlestick patterns, right? You have to be able to understand them then and also know and understand the information they carry. So at the beginning, we started looking at candlesticks, individual candlesticks, looking at structure of candlesticks. Then we started interpreting the information the candlesticks carry. We started looking at candlestick wick. We started looking at candlestick body. So after doing all those things, we now went into candlestick pattern. And then one of the first candlestick patterns we looked at, there are a few sentences we were able to read here, right? Where we are clarified that candlestick patterns are the language of the market, right? If you go to a foreign country where you don't understand the language, that's not how you'll be able to communicate. That is the same way it is in the forex market. If you don't understand the language of the market, how will you even know how to make any trading decision? You can't be able to know when to buy. You won't be able to know when to sell. You have to understand the language of the market first before you can be able to make such decision. Then we looked at one of the most important candlestick patterns that I told you that it is engulfing, right? We looked at engulfing bar. Yes, this is it, engulfing. Then I told you that when you hear the word engulfing, the first thing that should come to your mind is something like covering, right? Then I also told you that if you hear the word engulfing, that you should be thinking of something overshadowing. That means that there is something big. There are two things, right? One is small and the other one is engulfing the other. One is overshadowing, one is covering. Yes, the word is enveloping. One is enveloping the other. These are some of the things that should come to your mind when you hear the word engulfing. And because I told you and you already know that in the forex market, we have two players, right? We have the buyers, which I will call B, and we have the sellers, which I will call S, right? And then we as traders, we are coming to the market either to buy or to sell. So because of that, if you want to trade the engulfing bar candlestick pattern, there are two types. The ones you need for buying and the one you need for selling, right? That is why in the engulfing bar candlestick pattern, let me just write engulfing bar candlestick pattern. We have the bullish one, the bullish engulfing, and we have the bearish engulfing. We call it bullish engulfing, right? And then we have the bearish engulfing. These are the two types of engulfing bar that we have. The term bullish engulfing comes from the fact that we want to buy, right? We want to make sure that before we buy, we would have seen the bullish candle totally engulfing a bearish candle. And before we sell, we should see a bearish candle engulfing a bullish candle. This is just the simplest way for me to be able to illustrate this, right? Then I told you that at this stage, your goal is for you to be able to open the chart. When you open the chart in this way, this is a chart. When you open the chart in this way, you should be able to spot a candlestick pattern and tell me with high level of clarity, right, that this is bullish engulfing. This is just what we want you to be able to achieve at this stage. just for you to be able to see the candlestick, spot it, and then be able to identify it. This is the stage where we are. We are not telling you to learn how to trade it. No, we are just saying be able to spot it, train your eyes so that you'll be able to spot it. So now I told you that the first candlestick you are looking at is the engulfing, right? Then this is the structure of an engulfing bar. Let us start with bullish engulfing. For example, bullish engulfing. What is the structure of a bullish engulfing bar? Yes, when you want to trade bullish engulfing, you would want to see the market coming down temporarily like this. Sellers are pushing the market down this way. And then we start seeing the power of the sellers reducing like this. Then after that, we now see a bullish candle that totally enveloped or engulfed the bearish candle. The structure of a bullish engulfing candlestick pattern is this. Let me bring out the normal shape for joining a candlestick pattern. We want to see a bearish candle this way, but this bearish candle must be showing signs of less strength, right? This bearish candle now should not be a bearish candle that is having bearish momentum. Do you understand? When you see a bearish candle that is smaller, that is losing strength, that is now totally enveloped or covered by a bullish candle in this way. Yes, in this way. This is what we call bullish engulfing. As you can see, you see that the bulls are totally engulfing the bears. So what it means is that when you see this type of candlestick pattern, it is likely that the market will start going up because the bulls has already shown their power. The bulls have shown their presence, right? That is bullish engulfing. Then we want to see bullish engulfing if you want to trade it with a trend, right? Even though right now we don't want to talk about trading it, but let me just give you a clear example. Something like this. Let's assume that the sellers are temporarily pushing the market down, and then we now saw a candle that is showing that the power of the sellers is reducing. A small candle. This candle is going to be small such that the momentum of the sellers are reducing. Then we'll now see a bullish candle that has this bullish momentum that now came and engulfed the bearish candle. Simple. This is what we call a bullish engulfing. And when you spot this type of candlestick, you should be looking for opportunities to buy. We're still going to illustrate in the chart. This is it. Then the opposite of bullish engulfing is the one we call bearish engulfing. Yes, bearish engulfing is the opposite of bullish engulfing. We want to see bearish engulfing when we want to sell, right? How do we know that early signs that sellers are now in control of the market? Is when we see a bearish engulfing. When we see the bears totally engulfing the bulls, right? So we are going to see a market that has this type of structure, a market that is going up like this, and then you now see a bullish candle that is totally engulfed by a bearish candle. You see a bullish candle like this, smaller bullish candle, right? That is totally engulfed or enveloped by a bearish candle. Simple. This is it. This is a bearish engulfing. And when we spot this type of candlestick pattern, we're expecting the market to keep on pushing down. So I believe, and I have this confidence in me, that anywhere you see bullish engulfing or bearish engulfing candlestick pattern in the chart, you are going to be able to identify it. So moving away from there, the next candlestick pattern I want us to look at is the morning star and the evening star. There's a candlestick pattern that we call the morning star and the evening star, right? Let me just something like this: morning star, and we also have the evening star. We also have the evening star. This is a candlestick pattern. These candlestick patterns, they have, the reason why I want to treat it after the engulfing is because this candlestick pattern has the same, they have almost the same principle with that of the bullish and bearish engulfing. Now, morning star, sometimes I prefer to call it, in order to avoid confusion, I'll just call it something like this. I'll call it star. For example, I'll just call it star and then divide it into two. The morning star is for buying. Here you get morning star. You should spot morning star when you want to buy, and then the evening star is for selling. When you want to sell, if you spot evening star, you should be looking for selling opportunity. I get it now.
So let's just assume that it is star. Remember that the name does not matter. The information the candlesticks are carrying is more important than the names. You are not writing an exam where they will be telling you to cram the names, right? Just spot it. Know the information they are carrying. Know what to do next when you see it. That is what will give you money. So exactly that way. Now, Morningstar is for buying opportunity. You are looking for buying opportunity. And for you to look for buying opportunity, once you see the market is temporarily pulling back like this, then Morningstar is made up of, let me just give the illustration first before I start showing you. Morningstar is made up of 3 candlesticks. First one, we want to see a bearish momentum candlestick. This is a bearish momentum candlestick. Now, we want to see another candlestick that has little or no bearish momentum. I get it now. This small candlestick now in the middle. Please pay attention to this because here is very tricky. This small candlestick now in the middle can be bullish or bearish candle. But the fact that I want to mark here is the fact that this small candle here is having lesser bearish momentum. You see that the bears are already losing their strength. Just imagine where the bears are pushing the market like this. This candle is showing that the bears are losing their strength, right? And then finally, you'll now see a bullish candle that now envelopes everything. So this is almost the same principle like as that of bullish engulfing. I get it now. Are you seeing these 3 reaction or arrangements here is what we call Morningstar. What is the principle behind this candlestick formation? The sellers were in control of the market. The sellers were moving the market down with this strong selling pressure or this strong selling momentum. And then finally, we started noticing by this last candle that the power of the bears or the sellers is now reducing. Are you seeing that the momentum, when I taught you about the psychology of the candlestick body, you know that this particular candlestick has greater selling momentum and this one has lower selling momentum. And then after that, you see a bigger bullish candle that is enveloping. I get it now. That is showing that the bulls are now in control. From here, you can be looking for opportunity to buy. This is what we call Morningstar, for buying opportunity. The opposite of Morningstar is the evening star. In the evening star pattern, we want to see the buyers pushing the market up like this, right? Then the buyers are pushing the market up with strong buying pressure. Pushing the market up with strong buying pressure this way. I get it now. They want to keep on pushing the market up. Then finally, you now saw a smaller candle. Sometimes this smaller candle might be a bearish candle like this. Small. I get it now. You see a small bearish candle like that. Even if it is bullish candle, it doesn't matter. But what you know is that the energy at which the buyers were pushing the market up from here has reduced. This energy that the buyers are using to push the market up from here has reduced. And then finally, we now see a stronger bearish momentum candle that now envelopes this stuff. This reaction here is what we call evening star. I get it now. You are still going to pay attention to all these things later. Let me just move ahead. We've discussed engulfing back candlestick pattern, bullish engulfing, bearish engulfing. We've discussed the star, the morning star, and the evening star. The morning star is for buying opportunity. The evening star is for selling opportunity. And when after seeing something like this, you are going to see how the sellers will keep on pushing the market down. So when you see this type of reaction in the chart, you should know. Then another type of candlestick pattern we need to look at is a rejection candlestick pattern that is very important. I think we've discussed something like this. When we call it doji. Another candlestick pattern I want to look at is the one we call doji, D-O-J-Y. And I told you that doji means indecision. Doji means what? Indecision. It's an indecision candlestick. It's an indecision candlestick. In this doji candlestick pattern, you see that the buyers and the sellers have equal momentum. You see something like this. I told that in a normal candle, we are going to be seeing open price and close price. But in this case, in this doji candlestick, the open price and the close price is the same. where the market opened is where the market also closed. I'm going to leave, like, let me say 5 minutes before the end. We'll go to the chart and then I'll ask you questions so that I'll know that you can be able to spot some of this candlestick pattern. So I'll be faster this time around. This is the doji candlestick pattern, right? And just like we always do, every candlestick pattern has the bullish type and the bearish type. The bullish type of doji is the one we call dragonfly doji. We call it dragonfly doji. Yes, dragonfly doji is the bullish type of doji. Why the bearish type of doji, we call it the gravestone doji. This way, the gravestone doji. Gravestone, yes, doji. So this is just like bullish, telling me bullish doji. Bullish doji is called dragonfly doji. Like I said, the name does not matter. But if you want to be a forex mentor, a forex educator, right, and want to take your forex career to the next level where you can be able to impart the knowledge to others, you should just know this, because you'll be teaching them, and when you are teaching it, you have to be speaking it, right? So this is bullish doji, and this one is bearish doji. I get it now. I'm going to illustrate. Remember that a normal doji is just a candlestick pattern, a candlestick that is illustrating that the buyers and the sellers have equal strength. There is pause in the market. A normal bearish candlestick will have something like this. You see the open price here, open, right? And then you see the close. But in the case of doji, the open and the close are equal. Let me wipe the sheet, right? So now this is doji. Good. This is, let me make it straighter or more straight. Yes. This is doji, indecision candlestick. Then this is the bullish one, the dragonfly doji. Let me just change the color to green so that you see. This is the dragonfly doji. Let me draw the dragonfly doji for you so that you see. This is how the dragonfly doji is. Good. Something like T. Yeah, this is dragonfly doji. The open price and the close price is the same. Why this is the gravestone doji. Yes, let me draw the gravestone doji for you so that you see. This is the gravestone doji. Yes, I believe you can see this. So this is dragonfly doji and this is gravestone doji. These things are indecision candles, right? What information is this thing carrying? The information that this particular candlestick pattern is carrying, this gravestone doji, is that sellers normally, sellers want to keep on pushing the market down, and then they reach here. They wanted to push the market down to this place, but buyers came, rejected them, and brought price up, and it closed. The open price and the close price were equal, right? In this case now, buyers want to keep on pushing the market up. In this case, buyers want to keep on pushing the market up, and they push the market up to this place, but they were not able to close the market there, right? The price was not able to close there. Then sellers came and pushed the market down, and they formed this type of candlestick pattern. The open price and the close price is the same, but it's showing the weak rejection is pointing to the upside, showing the rejection of the buyers by sellers. Sellers rejected the buyers. Here in the dragonfly doji, you see that the weak rejection is below like this, showing that the buyers rejected the sellers. But here the weak rejection is above, showing that the sellers rejected the buyers. I hope that is clear. Now let me now give you a better illustration. You see the buyers moving price up, right? And then this type of candlestick pattern formed. So a candlestick pattern like this. At this point, the color does not matter. Please bear in mind that at this point, the color does not matter. Even if this candlestick is green in color, it is still carrying the same information. And the information is carrying is that sellers rejected the buyers, and now price is about to push down. Then if price continue pushing down and then reach this place, and you see this type of candlestick pattern, let me delete that, and you see this type of candlestick pattern, something like this, what it means is that buyers are now rejecting the sellers, and then there's tendency that price will start going up. So we are going to be looking at this in the chart and be spotting them. After that, there's another candlestick pattern that is very important, the hammer, right? You have a candlestick pattern that will call the hammer and the shooting star. Yes, look at the structure of the hammer and the doji are carrying the same information. The difference is just that the hammer has an open price and close price that is slightly different from each other. Here you see that this candlestick opened here and it's closed here. There's just a little difference between the open and close price. Unlike the doji is like this. I hope you know, but the hammer is like this. This is the dragonfly doji. Then you also have, this is now the bullish hammer. We call it hammer. Then we have the other one called shooting star. I think so. It is like this. Yes. This one is shooting star. This is like the bearish hammer. I get it now. It is carrying the same information with this candlestick. There is no difference. It's carrying the same information. The only difference here is that the only thing you notice here is that buyers want to keep pushing the market up. Sellers rejected the buyers and pushed price down. And then finally, the close price was below the open price. So there was slight difference. But when sellers pushed price down and rejected the buyers and pushed price down, the open price and the close price were equal. Assuming the open price became slightly different below, it becomes a shooting star. I get it down. So this is bullish hammer and bearish hammer. And how do we trade it? We trade this type of candles equally. We call them rejection candles. I get it now. We call them rejection candles. Whenever you are selling, let me just draw this like this. Whenever the market is selling, and then you start seeing candlesticks like this shape, or this shape, or this shape, I get it now. No matter the structure, and you are seeing the wicks down to the downside, the shape of the candles are like this, something like this. I get it now. No matter the color this time around does not matter. They are carrying the same information. Either it is green or it is red, whatever the color is, they are carrying the same information. Yes, I believe that it is clear.
I want to ask a question.
It's all right. Ask your question.
Okay, like if you are in a downtrend now and I start seeing these rejection candles now, so it means that the market wants to go up.
Exactly.
Okay. The same thing. The opposite is for an uptrend too.
Exactly.
That means the market wants to go down.
Good.
Okay, so that's what I want to ask. Let me mute myself.
So as you can see, all this at this level now. At this level, are you not seeing how the seller, because the sellers want to keep on pushing the market down, but on each case you are seeing rejection candles. You are seeing how the buyers are rejecting the sellers, preventing them from pushing the market downwards. So this is a candlestick pattern that is saying, oh boy, start looking for buy, because the buyers are already rejecting the sellers. Are you seeing it now? So the opposite is the case, the reverse is the case. When you see it like this, let's just assume that the buyers are pushing the market up like this, and they now reach a particular place where they now started seeing rejection candles of this nature. Rejection candles of this nature. Rejection candles of this nature. All this is a rejection candle. The wicks are pointing to the upside. The rejection candle. This one now is indecision. All of them, the wicks are pointing to the upside. I get into now. Even if the color is red, don't tell me, sir, the color is red, because of that you are confused. If the color is red, better safe. If the color is red, better for you. If the color is green, the same thing. Don't worry about the color. I get into now. All this is here are rejection candles. It is showing that sellers are rejecting the buyers, and buyers are losing strength at this particular zone. So what do? You should be looking for opportunity to what? Sell. Are you seeing that we've been able to discuss some of the most important candlestick patterns? We discussed the doji. We discussed doji. We discussed engulfing bar, engulfing. We discussed morning star and evening star. You can call it star if you like. The morning star and the evening star. We discussed hammer. We discussed hammer, the one we call shooting star. Let us look at this PDF and know whether we can get more information about the hammer. Just look at this PDF. If you've not started getting this PDF, please start. Let's discuss this PDF and know whether we'll get more information about the hammer. This PDF is very interesting. Very interesting. If you read it, you are going to love it. If you start reading it, you are going to love it. The author is writing it as if he's telling a story. Are you seeing how bullish engulfing bar pattern used to be? So the author was telling a story. We'll be communicating. The evening star. How the evening star is. Are you seeing how the buyers were pushing the market up? The buyers were pushing the market up. Then the evening star formed. The evening star formed. We are seeing a bullish candle, followed by this small. It can be rejection candle. It can be doji. This small candle here, the color does not matter. But we are showing that the information there is that this candle here is losing. The buyers already losing strength. Then when you now see it followed by a bearish momentum candle, look at how price started coming down. When you're leisure, please go and be reading this thing. Now the hammer, good. The hammer is called the pin bar. I get it now. The hammer is called the pin bar. This is it. This is what I wanted to see. This is the pin bar. Look at how it is. The pin bar. This is the pin bar. The opposite of the pin bar. This is the pin bar. The opposite of the pin bar is called the shooting star. Like this is the shooting star. So this pin bar is also called hammer. Hope you can see it. You see it here now. This is the hammer, the pin bar. Look at the closing price and look at the opening price. Look at the long lower shadow. Are you seeing now? The sellers are pushing the market down. Okay, we are running out of time. Okay, the sellers, 9 minutes is remaining. See the very long period of time. The sellers are pushing the market down, right? Look at how the sellers are pushing the market down, and look at how this pin bar formed. This is the hammer, the pin bar, and then after that, the market started going up. We are going to see it definitely in the chart. We are going to see it. So this is the shooting star. This is the shooting star. The opposite of the pin, we call it bearish pin bar. So you have bullish pin bar and bearish pin bar. The bullish pin bar is called, the bearish pin bar is called the shooting star, while the bullish pin bar is called the hammer. Please pay attention to this. This is the shooting star, the bearish pin bar. But how the market is going up, right? Then this shooting star formed, and then the market reversed. It's not just it. Understand the information, the psychology behind it. Buyers want to keep on pushing price up. Buyers want to keep on pushing it up. But the sellers came and rejected the buyers, forced buyers down, closed it this way, and then took over. So this long week is what is important to us. That's why I told you that the week of the candles, when we started our candlestick, what is candlestick? We discussed the week of the candle. You see how important the week of the candle is. And now, there's a candlestick pattern called harami. I don't trade this candlestick pattern, you understand? But in our next class, we are going to discuss the harami, then discuss tweezer top and tweezer bottom. Sure you get now, tweezer top and tweezer bottom. Okay, I have 8 minutes. I can just use 2 minutes to discuss the harami. Sure you get. I can just use 2 minutes to discuss the harami. Once you hear, or whenever you hear harami, this is the spelling, harami. It means pregnancy in Japan. Yes, harami means pregnancy in Japan, or pregnant, or pregnancy. Doji is indecision. Remember. So this what you are studying in Japanese candlestick. So the origin is from Japan, and that's why you see how this is. So what this means is that a mother is pregnant with a baby. As you have harami, right? You have bullish harami and bearish harami. This is harami. We have bullish harami, and then you have bearish harami. You have bearish harami. I get it now. Bullish harami and bearish harami. Let me illustrate a bullish harami for you. Bullish harami you want to buy, right? Bullish harami you want to buy, and we want the market to be coming down gradually. The market is just retracing down this way, and then we saw a bearish candle that is pregnant with a baby. Saw a bearish candle like this, bearish momentum candle that is pregnant with a baby. We want the baby that is pregnant to be a bullish baby. I get it now. So this is bullish harami. Then after seeing this now, we want to see price going up. There's a reason why I don't trade this pattern. It's a personal reason, right? The reason why I don't trade this pattern is that for me to trade this pattern, I will want to see a strong bullish candle, bullish momentum candle before I can enter. I don't want to just take a buy trade because this mother here, this is the mother, because this mother is pregnant with a child. And I believe the child will keep on giving birth to bullish candle. So I don't agree. Yes, it happens, but this is not my best candlestick pattern, because you don't have to trade every candlestick pattern for you to be profitable. Before I trade this candlestick pattern, I want to see the next candle to form to become a bullish momentum candle like this, so that I can be able to trade it. And once this thing has happened, it is already carrying the information of morning star. Are you getting it now? So at the end, they are just related to each other. Now, the opposite is now bearish harami. In the bearish harami combination, you want a bullish candle like this to give birth to a bearish candle, a small bearish candle this way. I get it now. And after that, you want to sell so that more bearish candles will start printing like this, and the market will continue to sell. I get it now. This is exactly what you trade. Why did you take this trade? You took this trade because of this bearish harami that formed here, right? That's why I said normally I don't want to take it because of this bearish harami. I want the next candlestick to form. And once the next candlestick has formed, it is almost as if we now have evening star. I get it now. So that is it. I've explained bearish harami and bullish harami. The final candlestick pattern we are going to be looking at is the twister top and twister bottom. This one is very good. I trade it as well, right? Twister top and twister bottom. We want to see twister top is like this. We want to see the buyers controlling the market. We want to see the buyers controlling the market this way. We want to see the buyers controlling the market, right? And then the buyers moved up the market in this way, and then we saw a strong bullish momentum candle that was formed. This strong bullish momentum candle is showing the power of the bulls or the buyers trying to push the market up. And then suddenly we now see equal and opposite bearish momentum candle. I get now equal and opposite. Remember, it must be equal and opposite. No, let me bring this back and show you that I didn't get it correctly. It must be equal and opposite. So this is what we call twister top. It's just like two big boys, Triple H and Randy Orton are fighting, right? You know, these guys are big boys. So Randy Orton now carried Triple H and hit Triple H on the ground. Triple H stood up immediately with the same equal force and turned Randy Orton down and threw him on the ground. And then price started coming down. I'll get it now. Then this is what we call twister top. This one is what we call twister top. Why? Because after it happened on the top. Then what of twister bottom? In twister bottom combination, we want to see the bears trying to push the market down, and then finally the bulls came and overtook took over power. I get it now. Two big boys. This is what we call Theresa bottom. And after this, we want to see buyers pushing the market up. I get it now. This is very, very interesting and very sweet. If you put in personal effort into this, you are going to enjoy the whole process. So you have 2 minutes left. In these 2 minutes that is remaining, I am going to put, okay, here now, what is the candlestick pattern that was formed here?
Yes, sir. Bullish and okay, let me see. I thought bullish engulfing.
Good. Bullish engulfing. So once you talk, mute yourself immediately.
Okay.
So this is bullish engulfing, right? I saw how the price pushed up. So you get. Now let me just scroll before the meeting off and scroll so that we'll see. Look at here now. Let me delete this so that you see. Can you see here? Can you see here? Can you see here? Unmute yourself. What is this?
This supposed to be gravestone doji. That is the bearish version now.
Yes.
Or is okay? This one now. Yes. This one now is the shooting star. This one you are pointing at now, the shooting star.
Thank you very much, Emmanuel.
Is it true?
Thank you very much, Emmanuel. Yes.
Can you see this now? What's this?
This one is the pimba hammer. Pimba. Is it correct?
Yes, correct.
Yeah.
What's this?
Is it not the same pimba hammer?
It's the same thing. I see how the market moves.
Yes.